communication is the key. That's
Yeah.
a very, very important, and being transparent.
Mhm.
So if you can talk about that a little bit, with your previous experience and now experience,
Yeah.
how do you feel that communication has changed or
Yeah.
has gotten better, or some of the key points that somebody should keep in mind?
So yeah, communication is huge, and that's part of the reason that I mentioned with Four Oaks we were kind of pulling in different directions, and part of the reason we were pulling in different directions is because we weren't communicating in the right way.
Welcome to the Real Estate Vibe Show. I'm your host, Vinky Loomba, a commercial real estate investor. And today I have a very, very good friend, Brian Briscoe, with me. Welcome, Brian.
Thank you, Vinky, for having me. It's always a pleasure to talk with you.
Thank you. And this is the second time, Brian, with us. Brian, I really appreciate your time coming to my show again. And I know a lot has transpired, so we're going to touch on that. But before that, a little bit about Brian. Brian is a full-time apartment investor with ownership interest in over 1,100 units, totaling over 100 million in assets. He's a multifamily coach and mentor, the founder of Streamline Capital Group, the director of multifamily educational community, the Tribe of Titans, and the host of the Diary of an Apartment podcast. He retired from U.S. Marines after 20 years of service. Congratulations for that, first of all. And today we'll discuss multiple things like finding the right partners or issues with the capital raising. But before that, if I recall, Brian, last time when you came to my show, you were with Four Oaks, right? And now you have found a new company, Streamline Capital Group. So you have expanded so much, have grown so big that you kind of started your own thing at a larger scale. Can you tell me a little bit about that?
Yeah. So Four Oaks, there's basically that the name came from, there was four partners who came together to start syndicating. And, we had a lot of success together. We purchased, I think, 8 or 9 properties. I'd have to, go back and count. But, it's where I got my start. I had some really, really solid partners. End of the day, we just had differences in where we wanted to go and what we wanted to do. I think the biggest thing is I had the podcast. I have a LinkedIn presence. I was talking with, a lot of different people about real estate and about partnership and about things like that. And, some of my, that was kind of one of the things that I was always wanting to partner with other people. And I was always wanting to do, more with others. And essentially, the agreement that I had with my partners at Four Oaks is that we'd be exclusive to each other. But, eventually I realized that, I wanted something different than my partners. There was nothing bad inside the partnership that happened. Just I wanted to go a slightly different direction than my partners did. And, so we discussed it over a couple of months, how things would look. And we all agreed that the best thing would just be for me to leave the group and go on. So that's essentially what happened. End of the day, there was a slightly different alignment. We wanted slightly different things. And we found out that we were just pulling in different directions for a while. So yeah, that's it. So Streamline Capital is what, came out of that, kind of the phoenix rising out of the ashes. And then, the Tribe of Titans was previously owned by Four Oaks Capital. And, we just negotiated that would come with me as well. And also the podcast, the podcast came with me as well. So, when I left, I broke off those 2 branches of Four Oaks. And that's actually a really good way to say it. Broke off the branches of the Four Oaks. But anyway, so Streamline Capital is my new syndication company, my new investment company.
Yeah, that's good. Actually, that's like a little bit challenge or hurdle, but
Mhm.
something bigger and better for you. And it's
Yeah.
always like that when you start working with somebody and then your vision changes or vision expands, you have a bigger vision that does not fit into the old, I would say the pattern, whatever you guys trying to follow.
Yeah.
And that was good for you to branch out anyways. So a
Yeah.
little bit about yourself, Brian, if you
Mhm.
can give us a brief background about yourself. I know you were in the military, you just retired.
Yeah.
Congratulations again.
Thank you. Thank you. So, if you rewind the clock 25 years, I never once thought that I would be in the military for a day, let alone 20 years. But, September 11th, I think most people, what happened September 11th, 2001, but that kind of changed my outlook on the military, and that kind of motivated me to, go talk with a recruiter, and I ended up going to, joining really shortly after September 11th, and ended up making it a career. It was lots of reasons why that I won't go into today, but along the way, I started picking up single family homes. Um, my my plan was to, well, if you know the military lifestyle, you move I think the shortest time period we were in one place was 9 months.
Mhm.
And the longest we were in a single place was 3 years, So,
Mhm.
if we were moving every 9 months to 3 years, the plan was, every time we could manage it, we would move, we would buy a house, we would live in it. And when we left, we turn it into a rental. So the plan was just to never sell, buy as many as possible, never sell. We did that 3 times, and over the years, I saw a lot of growth in the equity. I saw the rental prices the tenants were paying go up and up and up every single year. And I just saw the possibilities, and I fell in love with real estate is really what it was. And I knew one thing is that when I got out of the military, I was going to do real estate full time. And so, I started kind of planning my exit, trying to figure out what part or, how I'd be involved in real estate. Um, Decided that multifamily would be the reason just because, wow, you can scale. I mean, it's
Mhm.
like it took me 10 years to buy 3 houses, and that was, saving up for down payments and, leveraging and things like that. Yeah, with multifamily, the loans are easier, the scale is easier. I mean, you can buy one apartment complex. We're buying one right now that's, 277 units. And so you can scale much more rapidly. So yeah, I caught wind of multifamily, got into a coaching program, paid at the time, it was the largest check I had ever written. I actually put it on my credit card, but figuratively, the largest check I'd ever written was for that coaching program. And yeah, long story short, as you mentioned in the bio, right now, I think I'm in 1,100 and change units, and another 400 under contract right now to purchase. And yeah, so that's kind of the long story short.
Wow, awesome. And I wanted to start from here. My first question regarding is about the partnership because
Yeah.
a lot has transpired since we met first time. You were with Four Oaks, and
Yep.
then now you have formed your own company, and you went through so many phases of
Mhm.
partnering with so many people. So I would like you to briefly share your personal experience, what
Mhm.
criterias that you have now versus then,
Yeah.
finding the partners who you wanted to work with that's going to help
Yeah.
you scale.
I would say alignment is the biggest thing you need to worry about. Okay. You have to get along and your goals have to be aligned, and at the same time, I mean, there's a lot more to alignment than just goals, your risk tolerance, your vision of the future. I mean, you have to have pure and simple alignment, I think, and that's kind of the issue with Four Oaks. For the first year or so, we were completely aligned. We all just wanted to buy more properties, and that was the driving factor for us. But as we started, you kind of maturing in the business and looking at the future, like I said, we wanted different things, and so two of us left the company, two guys stayed with the company and kept the name. And so yeah, with partners, I would say alignment and um, find somebody that you can work well with and that you complement. I mean, for example, one partnership that I have, this is not with Streamline. This is something that we're doing as well. is, I have a partner that, approached me several months ago and was talking about coming in deals as key principals, and when you look at the complementary skill set, I have a lot more real estate investing experience than he has. And he has my net worth with a 0 on the end, right? So he's got 10x my net worth. And when you put us both together, we've got a lot of experience and a fair amount of net worth. So we can basically come in as a KP for any group and be that loan guarantor. So number one, we have a complementary skill set. Number two, we have alignment on what we want to do. We want to work with newer investors, people that we like, and lots of people, not just stick with one group, but, between the two of us, we're working with lots of different people and making lots of different relationships. On the Streamline front, one thing that I was having a conversation with somebody that owns probably 6,000, I think 6, 7, 8,000 doors. I don't know how many, but he's got he's kind of a mogul in this business. But when I was telling him what I wanted with my own company with Streamline, we talked for probably a half hour, 45 minutes one day, and after him asking a bunch of questions and listening to me, he made a suggestion that really just kind of opened my mind, and it was just kind of one of those light bulb moments. He just said, "Brian, it sounds like you're not looking for a partner. It sounds like you're looking for employees." And I started thinking, I'm like, you know what? You're right. And this particular person had built several companies and had a lot of employees going through, and he was able to just explain the benefits of, hiring people over partnering, and so yeah, with Streamline Capital, the difference that I have there is I'm hiring people, I'm not partnering with anybody in Streamline. No, some of my hires could turn into partners in the future. And I genuinely hope that happens. But for right now, I think the benefits are I've got a little more control over exactly what we do when we do it. I keep more of the pie, which is nice. Of course, I have to pay a salary right now, and I'll probably hire somebody else in the next 6 to 9 months as well. But so the plan with Streamline Capital is to purchase properties in the Salt Lake City metro area. And, so most of the employees right now, my plan is to, every employee for Streamline Capital is going to live in northern Utah. So that's the plan with Streamline. And, if there is a partnership that forms out of that, it's probably going to be, somebody I hire that a couple of years from now raises to a level to where, I want to bring them. And, by that time, we're going to know if we're aligned. We're going to know if we're going the same direction. And I think by the time that comes, it's going to be obvious. It'll be obvious. So yeah, that's kind of the rundown of, kind of partnerships and then partnerships in action. So the alignment. And that was the biggest thing that I think I was concerned about with the Salt Lake Streamline and the Salt Lake endeavors is, I was very reluctant to take on a new partner. I was very reluctant because of, the exit from Four Oaks and having to start over. I didn't want to go through that again. So anyway, that's where, this friend of mine suggested that I hire an employee instead of partnering him. Anyway, so far, so good. I hired a guy named Schuyler, who's totally awesome, smart guy. And he's been working for 3 weeks now. So we haven't found a property yet, but I think we're gonna do extremely, extremely well.
You brought up a really good point, hiring versus partnering with somebody. So let's talk about that a little bit. What is the main difference that you have found in
Yeah.
hiring somebody or partnering with somebody, isn't that like some other cases, sometimes your partners think they are more like hires versus like real partners because of kind of the share in the deal that they get. So let's dig deep a little bit on that.
Yeah. I mean, I think most people in multifamily start out being told to find a partner. Okay.
Mhm.
And quite honestly, that's what I was told the whole time. And so I was still looking for a partner. I hadn't even thought about the possibility of hiring an acquisitions guy. Right. And it was when you look at the people who are brand new to the business, most of them don't have enough money to go out and make the hire. Okay. And
Mhm.
I certainly didn't when I started, So for me, the partnership at the beginning was the only option. Okay. It's let me find somebody that can help share the load.
Mhm.
But with the helping share the load, obviously there's the equity share as well, So if, Vinky, if you and I were to partner, we would probably split everything pretty close to 50-50. We
Mhm.
would have different responsibilities inside the company, but we would split things 50-50, right? And so, my piece of the pie gets cut in half, but once again, with a partner, I'll be able to buy much larger pies,
Mhm.
right? So
Mhm.
it ends up being very beneficial to find a partner. Nothing wrong with that. But once again, Vinky, if you and I partnered, we're friends, we like each other. We would probably do well, but we have different ideas of what success looks like and different ideas of what the future looks like. And if we're not in perfect alignment, eventually that's going to create a larger
Mhm.
and larger rift, right? So, and like I said, that's what happened with Four Oaks. With hiring somebody, now I don't have to worry so much about differing opinions between partners. Okay.
Mhm.
I mean,
Mhm.
obviously, I've got to be a good boss. All right.
Mhm.
There has to be communication. There has to be direction. It's a different relationship, So, um, in a sense, we do what I want to do. The acquisitions are going to be the properties that I want to acquire. Our deal criteria is my deal criteria.
Mhm.
So I retain, control, which is something that I really want. And the other part, it's not just me retaining control, but the other part of it is I keep more of the pie.
That's true. But in
So
a partnership, you have one benefit because it's
yeah.
like more than one mind, more than one ideas, right? So it's
Mhm.
like you can just have a cumulative approach on taking down the properties, maybe go farther much faster.
Yeah.
That could happen too in the partnership. But
Yeah.
as long as your vision is aligned and you're on the
Mhm.
same page, everybody, right?
Yeah.
So,
And I mean, with the employee, we still have two minds, we still have two, and I, the person that I hired him because his skill set and his drive,
mhm.
I have to teach him how to underwrite, and I mean, and really me teaching him, I signed him up for several different underwriting courses, but there's a lot of skills that I'm going to have to teach him, but I hired him because he's smart. Okay. I hired him because he wants to do real estate full time. He's got a bachelor's in finance. And so I still have that same benefit of a partner. Just
Mhm.
the relationship is a little bit different, right?
Yeah.
We're not equals, but I respect his opinion and he does have ideas, and he's in his 20s, and that also very much appealed to me because he's going to be
Young
more in
mind.
touch with tech and trends and data
Mhm.
sources and things like that. So I think he complements me in a way that um, all my partners with Four Oaks, were roughly the same age. I was right smack dab in the middle, and you add 5 years or subtract 5 years from me, and we were right in the same demographic. We're all Gen Xers. Maybe one, the youngest one might be a slightly different generation, but when he's probably like tail end of the millennial generation, and he thinks differently, and so he definitely does bring that to the table. And I'm excited. He, like I said, he's wicked smart, and that's something that I think is going to be a benefit for a long term. But yeah, end of the day, the trade-off is, I'm fronting his salary. He's my acquisitions director, and the plan is if things work out between me and him, the plan is, we'll hire some analysts for him in the future that can help him do his job, better and at a higher level. But obviously the trade-off is it's probably going to be 6 to 9 months before we close on our first property and get an actual paycheck. And so I've got to front his salary until, we're acquiring properties and bringing revenue in. So that's the biggest trade-off right there. And like I said, 4 years ago, 5 years ago, when I started this business, hiring an acquisitions guy would never have been possible.
But that's good, actually. That's an investment on your part, If you believe in him, seems like you're really, really trust him. You feel like he can bring a lot of value on the table. And I certainly believe in that too, that you should have people with a diverse background as well as different age groups in your team, whether it's an employee-employer relationship or it's a partnership, because it's very important to have diverse group. So you have different ideas, and then you can have a better execution plan as well.
Mm-hmm.
So now I'm going to ask you the question over here, whether you're in an employee-employer relationship or in a partnership, communication is the key. That's a very, very important, and being transparent. Mm-hmm. So if you can talk about that a little bit, with your previous experience and now experience, how do you feel that communication has changed or has gotten better, or some of the key points that somebody should keep in mind?
So communication is huge, and that's part of the reason that I mentioned with Four Oaks we were kind of pulling in different directions, and part of the reason we were pulling in different directions is because we weren't communicating in the right way, and so me being hypersensitive to that right now, we're going to adopt the entrepreneurial operating system, the EOS system. And, next Friday, Schuyler and I are going to sit down with an EOS implementer. And one thing that we're going to talk about at that meeting is he's basically going to show us how to run meetings, how to communicate within the business. So, this time I don't want to take anything to chance. I don't want to, I'm a military guy, I'm not a businessman. I want to be a businessman. So, we're basically going to pay a ton of money for business mentorship now. And when I say we, it's really me, but I pay a lot of money for business mentorship so that we can do things right. You can take the traction book. That's where the EOS comes from. You can take the traction book and you can go through it and implement it yourself. But I think we're going to be a lot better, and we're going to accelerate our success if we bring somebody in to show us how to do it.
Wow, I love that. You got to have the systems in place, no matter where you're starting off, because that's the number one thing for your business. And I love that how you mentioned EOS. That's like a really, really good tool to have. And then getting that implemented in your team, that's going to add a lot of value. So I was going to ask you to share one horror story about partnership. I guess you do not have anything like that because it's like all past, gone, and then you have figured out a better ways of how to partner with others, and you chose the path of just being an employer and employ the right kind of skill set and bring those into your team and to scale that way, which I love that strategy because it's a little bit different strategy, but it's good, right? Still, you're doing the syndications and you're doing it your way, the way you want it. So I'm going to shift the gear here a little bit. We were talking before before we started recording, that you mentioned, about something about capital raising, that you got to have a plan for capital raising. Because these days, I think always like people are hesitant asking for money. They have some fear. They feel like, somebody mentioned that to me. Oh my God, I don't want to beg money from people. I'm like, not necessarily giving somebody opportunity to invest and make money is not that term that's going to be suitable for capital raising. So I wanted to hear your side of the story,
Absolutely. And when I started, there was something going around the mentorship group that I was in. There was this saying, if you find a good deal, the money will come. And I found that to be very false, I mean, not just false, very false. But, it's something that I think people want to believe. They want to believe that all I have to do is find a good deal and the money's going to show up. All right. I talked with somebody recently that got a deal under contract, put a lot of earnest money in, and ended up, losing over $100,000 because they weren't able to raise the capital. A newer group, they weren't able to raise the capital. They hustled, they reached out to everybody that they could, and end of the day, they couldn't raise the capital, they lost the money. And I mentioned earlier that, I've got a partner, and the two of us look for key principal deals. We look for to come in as loan guarantors. And so, I mean, we're interviewing, or we're talking with several different people a week. And I would say hands down, the biggest issue that the newer syndicators have is most of them aren't thinking about raising the capital. Most of them are thinking about, hey, I just got to find a deal. I got to find a deal. I got to find a deal. And, they bring a deal to us that, has a $6 million capital raise. And it's just like, okay, so first question, what are your plans to raise 6 million? I don't know yet, but this is a really good deal is what we hear, a lot, or, you know what, I was hoping you could help me with that, And so, that's probably, one of the biggest trends that I'm seeing right now with the aspiring investors, is a lot of people are looking for deals. Okay. And a lot of people are finding deals, and there's still deals to be found right now. There really are. But there's not as many people who are dedicated to raising capital, and the people who are finding deals are kind of ignoring that part. They're kind of assuming that,
money will
they're
come.
kind of wishing that away,
So what is your capital raising strategy?
My capital raising strategy, I do a lot of LinkedIn posting, the podcast. I've got a pretty decent size following. So my capital raising strategy is filter. I've tried to improve, or the funnel. I've tried to improve my funnel quite a bit, so that when people reach out to me on LinkedIn, we have a better system for handling that. So what I've implemented in the last couple of months is a script, and I mean, we don't have to stick to the script, but the script is designed to put people through the funnel. Basically, what I want to know before I put somebody on a call is, what their interest level is. I want to make sure that I'm not hopping on a call with somebody that, I spend 30 minutes with, and at the end of the call, they say, man, I wish I had money to invest in your deal. That sounds awesome. Because I've been there a lot. But yeah, so when somebody reaches out to me on LinkedIn, and I get about 100 new LinkedIn connection requests a week, I have this script that I go through, and it's, the first thing I want to do is just start the conversation, So what I do is I just throw something in the chat after they connect with me and say, hey, thanks for connecting. Very simple, and very easy. And I just want somebody to say, great, thank you, or you're welcome, or anything. We start the conversation. Next step is I'm going to ask them if they're interested in apartment investing, but I try to do it in a conversational way. So, if they say yes, the next phase that I go into is digging a little bit deeper, so see exactly what they're interested in. Okay. And when I get to that point, I after implementing just that kind of 3-step process on LinkedIn, I haven't gotten on calls where I've completely wasted my time, so the calls are more productive when we're on there. I can find out a little bit about the people before hopping on the calls. And so, it's kind of a warm start on the calls, but that's one thing that I've been doing. It's just, when I'm getting ready to raise capital, I start tailoring a lot of my posts more towards what I'm looking for, more towards investing passively. For the last month, most of my posts have been, I just launched a coaching program. So most of my posts have been more educational in nature, more appealing towards the aspiring investor. And you were using a similar thing with people that reach out for that as well.
Yeah, that's true. Actually, relationship building or building the trust with others is the first thing to raising capital.
Yeah.
It's not like that you have a deal all of a sudden you're going to go out and ask people for money, because if people don't trust you, they do not have your track record, they do not even know who you are, it's going to be super hard to raise capital.
Yeah.
So raising capital is a technique in itself, is building strong, long-lasting relationships.
Yeah.
And also having the communication going all the time. You have to be very clear, concise about your goals and what you're bringing on the table. You have to believe in your deal, whatever you're sharing with your investors, right?
Yeah.
If you have a full trust in your deal, they'll trust you.
Yeah. Yeah. And the idea with capital raising, the tip that I shared was to get people on the phone, but I think you said, you hit the overall big picture is, it's a relationship thing. Okay. So you start, and what I'm doing on LinkedIn is starting to build the relationship. Okay. What I do on the phone is I continue to build the relationship. All right. I make sure they're interested in multifamily, or they're going to at least consider investing in multifamily before. So there's a couple of filters I put in place so that I'm not wasting my time. Because like I said, I've had probably 100 calls where I've got somebody who's interested, they want to learn more, and then the call ends with, wow, 50,000 minimum investment. It's going to take me 2 years, 3 years to do that. It's just like, okay, so I could have spent my time. There's some benefit to that, but I think it's a bigger benefit for me to spend my time with the people who are ready to invest now.
That's true. I agree with you.
But yeah, it's all relationship. If you can build trust with somebody, and then like you said at the beginning, it's not about asking people for money. It's providing them with an opportunity to invest. And ideally, you're providing them with an opportunity to invest with you. And that's it.
I think so. That's a mindset shift right there, because it's not like that you're asking people for money. You are just adding value to their life, to their financial life, I would say. You're bringing something bigger and better that was not in the experience before. And you're giving them opportunity to multiply their wealth, And if people understand that, they'll come automatically invest with you. So you mentioned, a little bit ago that you have a little mentorship program going on. I know, and you're doing amazing things there. So you're not take a couple minutes and walk us through what you're trying to do?
Yeah. So, I learned early on, I am pretty good at raising capital, but what I'm really good at is teaching people. That's part of what makes me good at raising capital is I can teach people the pros and cons of investing, but I really have enjoyed helping the aspiring investor out from the very beginning. Ever since I was able to stand on my 2 feet with apartment investing, and that's the podcast design is to help aspiring investors out. I bring an aspiring investor on every episode. And so, and Vicky, I know you're aware of that because you've been on the podcast twice, but I bring an aspiring investor on every episode. I link them up with an experienced investor. And, that's kind of what I've loved doing is helping out the aspiring investor. And incidentally, that's also why that I'm willing to be a key principal with a lot of these aspiring investors. But, over time, I realized that, the best way to help people isn't with one-off phone calls. It's not with, letting somebody pick my brain for 30 minutes, So I started compiling, lessons learned, started organizing it, started creating, a bunch of coursework. And it's taken about 2.5, 3 years to get to where I was at and where I'm at right now as far as content. But I just decided earlier this year, it's been on my list for a long, long time. I wanted to mentor people on a much more consistent and persistent level. So yeah, about a month ago, I launched a mentorship program. And one thing that I'm adamant about is I want to be directly involved. All right. So right now there's no plan to hand it off to sub coaches and whatnot. So we do 2 group calls a week. And I do individual coaching with everybody in the coaching program as well. So it's kind of a hybrid between group coaching and individual coaching. And of course, like any coaching program, there's a lot of content too. But I've been told that my content is more actionable and less floofy by a lot of people. And I hope it is, so that's how I designed it is to give people actionable steps and not equations that don't work.
Wow. First of all, congratulations for launching a new program and good luck with it. I'm pretty sure you'll do really well. We're really out of time now. I wanted to ask you a question on the market trends, What do you see in your crystal ball? So what market's going to look like in the coming year?
Yeah. So market trends, a lot of people are forecasting, some people use the word a bloodbath, right? They're forecasting a lot of distressed properties coming to the market. I don't think we're going to see a ton of distressed properties coming to the market because I think a lot of owners, can see what's going on. If an owner has a rate cap or a variable loan and a rate cap that's expiring in 24, most of them are either stockpiling cash to be able to buy a new rate cap. Or if they're not able to stockpile cash, they're already looking at selling, So I don't think, there's going to be some. There was like a $200 million portfolio in Houston that was just foreclosed upon. But when you look at it, I think most people are, a little more proactive. They're not just going to sit around and wait until the bank forecloses. So I think you're going to see a lot of owners put their properties up for sale before they hit the distress point. I think they're going to be looking towards the future and say, holy crap, our interest rate's going to double, 9 to 12 months from now. Let's put this property on the market right now and see if we can sell it in the next 3 to 6. So they may be willing to take lower prices, but end of the day, I don't think there's going to be a glutton of distressed properties on the market. I don't think there's going to be a feeding frenzy. I do know that there are a lot of people who are still buying, and so I think all these properties are still going to be sold at market rate. There's not going to be a discount for the distress because there's still a lot of buyers out there.
Wow. So the people who are waiting on the sidelines for those kind of properties.
That's fine. I'll just keep buying. Yeah, I'm going to keep buying properties and they can continue to wait. Maybe I should go back and say, hey, everybody, wait, 2025, there's going to be a ton of distressed properties. Wait till 2025. And in the meantime, I'm going to keep buying.
That's a good one. I like that. Yeah. So please quickly share one golden nugget with my audience.
One golden nugget. Don't wait to buy real estate. Buy real estate and wait.
Right. I like that. Yeah. So this brings us to a rapid fire round. I'm going to ask you 5 questions and you're going to answer in 1 word or 1 sentence only. Okay. Are you ready?
It's going to be hard. I like to talk.
Let's try it. Let's give it a shot. That's true. It always helps that way. It's a mind shift right there. What is one best book that you have read and recommend to my audience?
Oh, geez. Good one. My favorite book of all time is a religious text. It's the Book of Mormon. It's another testament of Jesus Christ.
I know. I never read that, but I heard that from multiple people.
Yeah.
In 1 word, what does life mean to you?
Joy.
I like that. What is your biggest passion?
Multifamily real estate.
Awesome. I had this guy from Vegas with me. I asked him, what is your biggest passion? And he says, passion. I'm like, yeah, tell me the biggest passion too.
Yeah, my biggest passion is passion. Yeah. Multifamily and my family. So that's it.
Awesome. So if you could turn back in time and talk to your younger self, what would that be and why?
If I could get my younger self to listen to a guy with a gray beard, I would try to convince myself to think bigger and take more risks.
I like that. We all say that, right?
Yeah.
So how can people reach out to you?
LinkedIn is the easy way. If you're not connected with me on LinkedIn, just, Brian Briscoe. There's probably a couple out there, but I'm probably only Brian Briscoe linked to Vinky. But, if you're interested in the Tribe of Titans, which is the multifamily investing community / mentorship that I have, You can email me directly, brian@streamlinecapitalgroup.com. But you will probably get a faster response if you reach out on LinkedIn.
And how about your mentorship program? Do you have a website where people can go sign up or get more information about it?
The next call, and this was part of the design process. I've waited 2 years to launch. I wasn't going to wait till I had a website to launch. So literally the next call that I'm on is with a website designer, and we're going to get that up. But right now, we have information about the community up. It's thetribeoftitans.info, info. But it does not have coaching in it yet. But we'll see. That's my next call.
Okay, that's good. So we won't add that portion in there. We just add up to the contact.
Okay.
That's awesome. Thank you so much, Brian. It was super nice to have you with me today. Let me say that again. Thank you so much, Brian. It was super nice to have you with me today.
Thanks, Vinky. I appreciate it.